Hey guys, welcome back to the channel. Today we are conducting Gevo stock analysis and we're discussing exactly why I keep buying more of Gevo stock. Gevo is a fantastic company with so much potential. It's helping us as a world population reach net zero and still allowing us to go on holiday, conduct our business day to day, fly on airplanes. All of that is absolutely vital to being able to continue our way of life but do it sustainably. This company is fantastic. It's got so much long-term potential, and the fact that it is only $10 a share at the moment is fantastic for us investors. And now I'm going to take you through exactly the reasons why I keep buying more Gevo stock. If that sounds like something you're interested in, please smash that like button on your way in and I'll see you in there. Hey guys, welcome into the video. Here we are on the landing page for Gevo stock, ticker GEVO. You know this by now. Current share price is $10.12. If you caught this dip here on the 5th of March down when it went down to $5.76, congratulations, you've doubled your money already. I use that as a buying opportunity for sure, adding to my position. Current market cap is $1.57 billion, and the volume, as you can see, is ticking along okay, and the share price has increased nicely. Now moving on to some actual analysis, we have some pretty big mutual funds holding large shares of the company, buying in pretty recently in 2021, as you can see here, and buying some significant amounts as well. Institutional holders, there are also plenty of them that have been holding for a long time, since 2019. And then we have some direct holders, which are obviously the CEO and the like here, holding since the 8th of the 1st, 20. Now moving on to the revenue side of things, it hasn't really grown massively as much as you would like, but this company is still finding its feet and getting its product out there and developing its products. So yes, the revenue hasn't grown as much as we would like, but there's still plenty of revenue being generated, which is a good thing in my opinion, believe me. The company hasn't established its profit making side of things yet either, so there's a lot of red here. I wouldn't panic too much about that at the moment, as the company is really going to start getting somewhere with its target of net zero and having the funding to do so. More on that in a little bit. So as we move over to the analyst ratings, we have 2 buy ratings attached to Gevo stock: no overweight, no hold, no underweight, no sell. The consensus is buy, so there's a median share price of price target of $17, a low of $16 and a high of $18, and the current share price is $10, so there's a potential there that this company is $8 undervalued. Moving on to earnings. Earnings is just around the corner. I can't wait to see how this company does in its earnings report on the 17th of March. Just under a week away now. Excited to see how it did for the year 2020. There are some analysts that have done a little bit of research around this and said that revenues are expected to be down due to the global pandemic. There's going to be there might be a couple of surprises in there, we don't really know, but based on the global pandemic and based on the massive drop off in fuel demand, we can expect that this will have hit Gevo pretty hard as well, like it did oil majors across the world. Now I know that Gevo isn't a multi-billion pound company yet, or multi-billion dollar in terms of revenue, but it could still get hit pretty hard in terms of the use of its fuels. Now the big kicker here is just how many customers Gevo is starting to line up. So it's got Delta Airlines on board, Heartland Manhas, SAS, Trafigura, Total, Avfuel, Virgin Australia and Lufthansa. They've produced 33,000 cumulative hours and 150,000 gallons of jet fuel and 110,000 gallons of gasoline for customers. They're just getting started. They're just warming up here, guys. The technology is improving at a great rate, and they anticipate 10% compound annual growth rate of the fuels in use. For investing highlights, they've got strong management, Commercial scale demonstrated process, pathway to net zero, very important right now. Enormous total addressable market, which is absolutely correct. The oil and replacement of oil is absolutely vital. They've got an attractive pipeline of high return projects and a strong growing customer demand. So total addressable market is 88 billion gallons of fuel a year. An 80% plus EV scenario, which is a low estimate, which still requires 245 billion gallons a year by 2050. And a single net zero plant capacity could produce 45 million gallons per year. There's a strong demand for their products from all of the customers that we've already seen here. And there's a large growing portfolio of over 1.5 billion intake or pay contracts in place. And they have a majority of contracts of 6 to 7 year terms. Absolutely brilliant. That's what we want to see. Long-term contracts in place. We've got a high pipeline of high return projects in place too that are going to return a great deal of money to the company. As I said, this company is just warming up. Got assets coming on stream here. Got growth projects all in place to continue the growth of this company and continue helping generate that significant revenue. I'm just moving on now to the licensing and the leading to multiple revenue streams, and then I'm coming just down to the pipeline of attractive sites here that are either already in play or will soon be in play. And then at the very last bit here, the current financial information. Due to their share sale recently, they have $535 million in cash on hand to spend on growing and expanding the business. That's huge. Next, they have no debt outstanding at all. That means that all that $535 million can be spent developing, growing the business and really pushing the demand for their products to these petroleum companies and airliners. And they've got 198 million common shares outstanding at the moment as of the 22nd, 2021. So what does that mean? So the company has got no debt. They've got $500 million in cash to spend, and the amount of shares outstanding, although it's not enormous, it's not up in the hundreds and hundreds of millions, there's still plenty there to add to people's portfolios, which could see the share price tick up significantly very, very quickly, especially if they start announcing some of these contracts and getting these contracts further in play and further down the field. Gevo stock, if they start establishing these contracts in place, getting even more of those contracts, getting even more customers on board, there's a hell of a lot more jetliners and petroleum companies in the world than they've got customers at the moment. If they start winning them round and start licensing their products or selling their products through them, then you can expect this company to seriously shift up in value. That 1.5 billion market cap will soon be a heck of a lot more than that if they carry on going down the route that they have. They've got $500 million sat in the back pocket to help do this, and they're carrying no debt at all. That is absolutely fantastic. That is why I'm very bullish on this company. I hope you've enjoyed this video today, guys. Absolute pleasure to bring it to you. If you could smash the like button on your way out, that'd be absolutely awesome, and I'll see you in another investing episode. Catch you later.